Good afternoon. In this video, we're going over this past week's trades and the weekly recap. Before I get into the recap, if you're not in the room, you can find the link in the description of the video and in my bio section of social media accounts. Also, please like the video, subscribe to the channel if you haven't done so already. Now, I finished the week with 19 wins and 5 losses for a win rate of 79.17% for the week. That's below my weekly goal of 85%. It's just been a tough week, lots of fake outs here and there, and just a lot of surprise action that I was not expecting, but it is what it is. So we'll just get to the recap and trade ideas room on Monday. Let me just make sure that mic and everything is working. Sounds like my voice is starting to go again. Figures. Anyways, trade ideas room. Monday, SPY calls over 378. Monday is right here. Now, I was expecting a little bit of a bounce. As you can see, it started to sell off overnight on Sunday and into Monday morning. Then it popped up a little bit, pulled back. So I was kind of looking at the, where's Monday on the hourly? Right here? No, right here. Right there. This is Monday right here. See, I was kind of looking at this cup and handle on the hourly. You can see the cup and the handle right here. So I was thinking, okay, Monday we're going to break that, have a nice move up, and we did. It broke the 378. So I did wait out the, actually no, I didn't wait out the first 10 minutes because the first play I took was a 937. So as soon as it broke the level of 378, I grabbed it. So I grabbed the 377 calls at 226, and they went from 226 to 297 right up there. Now, you know, when you get it at 226 and it goes to 297, when you're getting a 50-cent move on SPY, that's a pretty good play, considering, because if you play SPX, it's a $5 move. And usually I'm taking the dollar plus almost every time. Because most of the time the market won't give you those huge runs, but sometimes it does. You just don't know what the market will give you. You just got to take what it will give you. And I did break the level. Then it was a quick fake out, and it dumped really quick. So you had to be in and out of that one pretty quick. Then it switched to puts at 10:02. Which is right here. You can see it faked out, started to pop up, and it dropped back down. Once it got below the 376 area, that's where I grabbed the 377 puts at 235, and then went from 235 to 434 in that dump right there. Then I grabbed puts at 1146, which is right here, I think. I think I grabbed him right here. 1146. Yeah, I grabbed him in this candle right here. Probably, I think I remember grabbing it when it started to pop up and started to come back down. I thought I was going to flush through VWAP, and the 20 EMA was right there. I probably should have known better to grab that because they're together. And usually when you have two indicators together like that, it ends up being a pretty significant resistance or support. In this case, it'd be support, and it did bounce right off it. So I held it. Then I ended up averaging down at 1157, which is right here at double top high a day. I got it initially at 780. The 3760 puts at 780. Then I added at 360 and averaged down. My average down brought it down to 445. And then I ended up stopping out at 250. So even if when it dropped here, I don't think it even went red. I mean green. So, but anyways, that was probably something I shouldn't have done. I could have avoided that, so I didn't. I think the reason I grabbed it was because we had this 10 o'clock news, which was, what was that? I'd have to go back and look. What was it on Monday at 10 o'clock? Let's see. I'm just trying to look back. Monday, the 24th. trying to see what the news was. It said flash PMI at 945, which was right here. Then we had what? No, it was the flash PMI that ended up doing this. But anyways, it was just a delayed reaction. It popped up, delayed reaction. So, but when it came up here and it started to look like it was going to go to VWAP, I thought because we've had a nice little flush right here that this was just a dead cat bounce. So we were going to flush again down to the 374 level, but it just did not work out that way. So I should have just looked at the two indicators and just said, okay, I'm not touching that. But part of trading, that's a loss I could have avoided, but I did take calls at 203, which is right here. As you can see, it double top, pull back, used the VWAP, the white dash line, as support. It came back up right when it broke the 377.50 area, because you can see all these candles right here. When it broke these bunch of candles, that's where I took calls. I took the 37.90 calls at 750, and they went from 750 to 890. Why did it only go that much? It seems like it should have gone a lot more than 750 to 890, but whatever. So yeah, it ended up being a nice little play at the end of the day. So another cup and handle play. You get the cup, you get the handle, and that's where it popped right here. So that was Monday. Now Tuesday, trade ideas room. See what I had Monday. 3 wins and 1 loss. So Tuesday, I had 3 wins and 1 loss too. Trade ideas room on Tuesday. SPY calls over 379. Tesla calls over 212. I took Tesla at 932. Make sure I have the right day here. The 25th. No, 25th right here. See, I took Tesla 215 calls of 505. I mean, at 932, I got them at 505. I said, what? Over 212, which is average, round out for a nice round number, because I hate, saying, okay, get it over 211.60. I mean, I don't like doing that unless it's on SPY with a bunch of consolidation candles. Then I'll do more precise, like right there. I would have say 222.60, because you get all these little small candles right here, and you want to catch that break as close as possible without chasing it. That's just hypothetical, I'm just saying. But anyways, I grabbed it down here over 212. I grabbed it right at open. Tesla, a few stocks I will not wait out the first 10 minutes most of the time. Bob and Tesla's an exception to the rule for the most part. So when I did break the 212, I did grab the 215 calls at 505, and then went from 505 to 891. So that ended up being a really, really nice play. Then I took SPX at 949, which is right in this candle. Popped up, came back down. I don't know why I grabbed it there. I have no idea why I grabbed it there. I grabbed the 3,800 puts at 750, added more at 520, new average 580. Then I ended up stopping out at $3, but I added more at 1040, which is right here. I really don't know why I even grabbed this, because I should have waited to down here at the 378 75 area for it to break this candle right here. I'll blow it up a little more. I should have waited for it to break this opening candle on the downside before even taking puts, but for some reason I just jumped in, and I have no idea why I did that. I shouldn't have done that. So that is another mistake, number 2, I could have avoided, but I did it anyways. So I grabbed puts at the next set of puts was at 105, which is what, right here? No, 105 right here. Not quite sure. I should have grabbed it right here at the 380, 350 area. I did not grab it there. I waited and grabbed it down here below the 383 level. I grabbed the 38.30 puts at $6, and they went from $6 to $7.30. So got a nice little play out of that. It's bouncing right off the 20 EMA, which is the blue line. You can see it every time it gets below, it gets bought back up, below, bought back up. It pops, drops below it, gets bought, below, bought, then it just pops right here. I probably should have grabbed calls right here, right over the 383.20 area. That's just where I like to get more precise with the numbers at opening. In pre-market, I round up just to make it a little easier. But when we get into the midday or get these small little cluster of candles, and that's when you end up trying to be a little more precise about the number. But anyways, I didn't grab calls right there. I should have, but the last play I took was another Tesla play. I took Tesla puts at 139 on the 25th, yeah. $139, which is right here, right when it broke below VWAP. I grabbed the 215 puts at 395, then went to 435 right there. Not much of a drop. Held the 37 EMA, which is the white line. I don't really pay much attention to that one. It doesn't act as support resistant nearly as much as the 20 EMA, the VWAP, RCT, or 200 or the previous day's candle. I do not, it does not react the same way to it. Sometimes it does, but very, very, very rarely. I know the RCT trend line is right there, but it moves every day, so it was not there at that particular time. So, but yeah, that was the Tesla play. Not much of a play out of that. So the next day was SPY. Again, at the SPY, it's just I've taken two bad plays on SPY. Those are two plays, last two plays I could have avoided, but on the 26th, I took SPY puts at 959, which is right here. I get why I took it here. It was right, it popped up, came back down, popped up, and right when it came back down, it looked like it was going to flush. So I grabbed the 382 puts at 179. I get why I grabbed it here. What day is this? This is what, the 26th? Is that a Wednesday? Yeah, it's Wednesday. So yeah, I get why I grabbed it here. This, I probably would have done it again and again because it looked like it was going to flush, and the way it looks, we had this massive run up, and then you have all these big earnings, misses and stuff. So I'm not quite sure. We did not have, what was the ER? I don't remember what the ER was for this week. Did Meta already report? No. I don't know. I don't remember. Anyways, it looked like it was going to flush through, then it ended up popping. So I just, whatever. Then I grabbed puts at, again, I've grabbed SPX puts again at 1027, which is rate 1027 right here. I get why I grabbed it right here. Back out a little more. What day was that? 26th. Just trying to look a little more. Okay. 26 right here. This is a pivot from the day before. Get it at what time? 10:27. So I got it in that candle right there. Yeah, I got it right in here in this candle. The 385, the 384.50 area, it started to reject a little bit, started to look weak. I started to pull back. You can see the long wick right here. So I got the 38.40 puts at $7, and then went from $7 to $1.80. I mean, you if SPY, if you're playing SPY and you're up $1.80, you're going to take it every time. So I know that SPX moves a lot faster and a lot more and can run $2, $3, $4, even $10. But when you're up $1.80, if you have like 10 contracts and you're up $1,800 or even $1,500, I mean, you'd be kind of stupid not to try to take it, at least take some. But yeah, I kind of like stick to the dollar plus rule and just scalp the play and try not to get the exact top or the exact bottom, even though sometimes I do get the exact bottom. But it's better just to take the meat of the move than trying to guess the top and the bottom and try to get the whole run, because if you try to hold for big runs, SPX will annihilate you really, really fast. It takes no prisoners. It doesn't care what you like or what you want. It does what it wants, and you just got to take what it wants to give you. So, so that was a nice little play right there. And then it popped right back up. Then I ended up grabbing puts again at 11.25, which is right in this, no, not that candle. I didn't touch it there. I waited up here. 11.25. Why did I grab it right here? Okay, let me see. What day? What day is the 26th? Right here. I'm not seeing anything on the hourly. Let's look at the daily. Is this the 26th? Yeah, the daily. Get a little bit of resistance right here, 387. You can see it, resistance here. Yeah, this is a 387 pivot right up in here. So let's see, it kind of rejects in here. Well, it pulled up over it, rejected here, but right here it's support and support. It got bought up. So this 387 to 388 area has a pretty big pivot on the daily. So plus you already had what, a $6 run, $7 run. So it started to get into that pivot 387 area. That's where I decided to grab a little bit. Probably should have waited for this kind of a scenario, the U shape that I mentioned back in the last, I think it was the last video lesson I did, but I should have waited over here, but I grabbed it right here. It popped up more. Then when it popped up more, I added, because I got them the 38.75 puts at 940. I added more at 740, making my average at 840. Then they went from 840 to 10 in that little drop right there. Then I grabbed calls at 1051, which is right here. I grabbed it right at VWAP. I'm not quite sure why I did that. I mean, I play the VWAP bounces, but it just sliced straight through. So I managed to grab, let's see, 38.70 calls at 660, average down to 420. I mean, I bought more at 420, made my average at 540, and what I averaged down at 12.59, which is right here. No, right here. So yeah, I bought up in here, sliced through, bought more here, thought it was gonna come up, then it just dumped. Decided to come back up, thinking, okay, we're gonna get that push. Then it just dumped again. So that one didn't work out. So not quite sure. Probably should not have bought it right there. That's one thing I've been noticing lately is that it's been slicing through moving averages off and on throughout the last couple of weeks. Like right here, it held. But right here, it just when it wants to slice through, it just slices through. So I mean, it's risky, you know, buying deep red candles at VWAP or 20 EMA because of they slice right through. Like right here, I should have waited for this U kind of shape pattern that I was just talking about over here. I should have waited for it right there, and that's when I should have grabbed it, and I should have waited for it to here, you know, but I probably would have grabbed it right here too. But I don't know, the 20 EMA and the VWAP are together. So you gotta pay attention to that. So I could have made that mistake right here again, but I didn't. And yeah, it is what it is. So I took a loss. So that, I mean, this was kind of a stupid move, but I probably would have ended up taking it there, and I probably would have taken a loss either way. So it's possible that I would have done that. So I try to anticipate bounces when I shouldn't, but it is what it is. I do this all the time, and I have a pretty good success rate of doing that. But sometimes it just bites you, and this particular time it did. So you gotta be a little more cautious and wait for the U things would be even better. But sometimes I just get impatient, and you sit there and watch a lot of action. You see a lot of plays you should have taken. Then sometimes you just get a little bit of FOMO, and you just end up doing something stupid. But it is what it is. So, but I did grab puts at 223, which is right here. So because I lost this, and it popped back up and it failed VWAP and 200 EMA at 20 EMA. But when it came back down to lower day below the 383 level, I did grab puts. I grabbed the 38.40 puts at $6, and they went from $6 to $15.40 in that play. So I got this one right, which was really good. That was a better play. I shouldn't have grabbed that. I shouldn't have touched that with a 20. Well, I didn't touch it anyways. But if I was going to, I shouldn't have anyways, because of the VWAP and 20 EMA. So, yeah, kind of a stupid move there. I should have avoided that. But I did get the good call right here. So, only one loss for Wednesday. Now, I took Tesla, I think on Wednesday, and I held it a couple days. Let me see what day I took it on. Yeah, I took it the 26th. Let me see. I took Tesla puts the 26th, which is right here. I took it at what time? Okay, why won't it show me the 336? Tesla the 26th, 336, right here. This is where I grabbed Tesla. Grab the 225 puts at 519. This is where I grabbed it. I'll get to it on Friday because I didn't sell until Friday. I ended up holding it through all this. Thought it was going to do good there. Then we have the Amazon and Apple. Yeah, Amazon and Apple. Yeah, so what day was this? Let me go back to SPY. Yeah, it was Microsoft. It was Microsoft and what was the other big one? Yeah, it was Microsoft and Amazon, Microsoft and Facebook that dumped on Wednesday, so after hours. So now on. I'll continue Tesla when we get to Friday's thing. Where is 27th? Okay. 27th trade ideas room. We already had Microsoft and Meta, which is Facebook. They tanked their earnings. And Google. Yeah, it was Google too. They tanked their earnings, and I said SPY puts under 382, which is right here. You can see it's popping up. You see the violent moves right here. So I used the bottom of these wicks of these candles right here. I mean, I could have used this, but I liked it right here, 382, nice round numbers. So I waited for 382 to break. Actually, I didn't. Yeah, I did. I bought it probably right down here because I didn't buy it at 948. So I didn't buy right there. I waited for the level. I could have bought it right there at the low of that candle. But, sometimes when you buy it there, it just reverses. But I waited for the 382. Then I grabbed the SPX 3810 puts at 830, and they went from 830 to 1430 in that dump. Then it just had a violent bounce. So I took calls at 1016, which is right here. I'm not quite sure if I grabbed it. Yeah, I think I grabbed it closer up here at higher day, right around the 384 level. I got the 3870 calls at 760, and then went from 760 to $10 right when it broke higher day. I mean, it dumped and had a massive couple green candles, and I just did not want to drop. And this is, like I said, after Facebook, Meta, Google, and Microsoft all tanked their earnings. It just dumped and just got bought right back up. It was completely crazy. I was not expecting that, especially when Microsoft and Google and Meta, where they make up a lot of the S&P 500, but doesn't really matter. I mean, what makes up the S&P 500, because it's been acting crazy lately. It's just been reacting more to political news and actual stocks that make it up, which is kind of stupid. I mean, you make cookies and you screw up the ingredients, like you miss the ingredients or you're off, it's going to taste like crap, but SPY just going to keep going. So I know that's a bad analogy, but that's sometimes how I look at it, that all these stocks make up the S&P 500. They're like, ingredients to some kind of food or whatever, and if you just mess up the ingredients, it just ends up turning out crappy. And and the market just shouldn't react the way it does, especially when the major components of the S&P 500 are the ones that have the biggest majority of the S&P 500 just get ignored. So it kind of just takes you by surprise. But anyways, enough of that. My bad analogies. But I took puts at 1118, which is rate 1118 right here. Okay, I get why I took it here. Dumped here, came back up, broke high day, then ended up being a fake out, flushed back down. I didn't grab it through the this area because you see the VWAP, 20 EMA, and 200 EMA is right here. Sliced through, popped back up, sliced back down. Right when it got back down here, I did grab the 38.20 puts at $8, popped up, then it finally dropped back down, and it went from $8 to $9.10. Then I bought puts again at 209, which is what, right here? No, 209, right here? No, 209, right here. No, right in here. Yeah, I got it right here. And I can see why I grabbed it here. It's making a lower high, and it dumped from VWAP, 200 EMA and VWAP. You can see the double... they're together right there, the 200 EMA and VWAP, that you could have grabbed puts right there. And I think I remember correctly, I was thinking about it at that particular time, but I didn't because SPY has just been crazy. Like I said, you have three big major players that missed earnings, and it's just having these wild pops and drops, and I just didn't want to grab it there and have it pop back to higher day. The market's just been acting crazy. But when it came back down here near lower day, below the 380 or at the 380.50 area, that's where I grabbed the 38.15 puts at 720, and they went from 720 to 930. It did break lower day quickly, then it bounced right back up. The SPY has just been really, really crazy, and this is where Amazon took a major miss, and then Apple kind of came in and saved the day. I mean, their earnings were, I guess, fair, and they're burning through cash like crazy, and they're having supply and demand issues, supply issues, I should say. So they'll think the market was looking at it that way. If they had more products or whatever, or they could have sold more. I don't know why the market thinks the way it does. But to me, I just didn't think the earnings was all that great, and they're burning through cash flow like crazy. But this is the next day, and it did not care what the market wanted or liked. So it just you have all these major stocks that make up the index, like Amazon, Google, Meta, Microsoft, had huge misses, and SPY is green. It just was crazy that Apple just carried the whole market, even though those four stocks, Meta, Microsoft, Google, and Amazon, make up more than combined than Apple does, but yet it followed Apple. So the market's just stupid like that. It just ignores what's going down and just follows what's going up. And I made a joke throughout the day where Apple was actually coming down. At the end, it ran with Apple all day long. Then at midday, Apple started to pull back a little bit, and the market didn't. And it's like, okay, yeah, you follow Apple up, but you're not going to follow Apple down when everything else is down too. So it was just a really stupid day. I was not expecting this whatsoever. This was really, really, really crazy that so many huge misses, and Apple being even somewhat fair, and just ended up ripping like that. Probably a massive short squeeze, and it will end up ending badly eventually. So, let's see. I took Amazon puts over ER through ER. So I took, let's see, I'll grab Amazon. I grabbed Amazon puts before ER. I had the 110 puts. I bought them right around the 2 o'clock, so I got them down here. I got the 110. I held them through ER, and they went all the way down to 87. That was just crazy. And of course, by the time it opened, it was over 98. It was at 98. I mean, still got a good play. I got them at 515, and they went to 1230. So that was a nice play. But if they opened up down here, they probably would have been worth 20 or more. But 100% play on Amazon. I'm not going to complain about that whatsoever. Then Tesla from the other day that I grabbed. Let's see. I grabbed right over here on the 27th. What was it? Was that the day I grabbed it? 27th. I just got to look again. 26. So I grabbed it right here. So yeah, I grabbed it here. Didn't grab it here, and this is where it dumped because I held it because of Amazon, thinking Amazon was going to miss. Everybody else was missing. And my thesis behind Amazon was that inflation is still running rampant. And it's not like inflation has just started out. I mean, inflation just started out within the last month or two. I mean, yeah, it's still new, but it's been around for a year plus. People have been feeling the pain for a very, very long time. Then interest rates are going up. Mortgages are doubling, tripling. And credit card debt. The people that do have money are using their credit card, maxing out the credit card debt. So it's just a very bad situation. So Amazon is going to feel the pain too. And that's why I took the puts based on that thesis that everyone's credit card debt's through the roof. Their cards are all maxed out. Mortgage rates are skyrocketing. They don't have the money to go buy things on retail. And that's why I took it. That's why I held Tesla. Then Tesla just dumped hardcore on Friday morning, and they ended up going from 519 to 695 in that drop. So they did end up paying pretty good. So it did work out. Then I took SPY calls at 1027. 1027. Right, 1027 is right here. Right here. I had the nasty run up from your earnings, and I was just like, okay, I pulled back. I thought about puts right here. I didn't. I just ignored it. But when it popped back up, I was like, okay, why not just get more stupid and grab the 3860 calls at $7 right here, and they went from $7 to $10 right there. Then I grabbed puts at 1040, which is right here. Why did I grab them right there? I think I grabbed them at the... What was the price at 340? 385. Okay, this is the area from the 25th and Wednesday. So you got Tuesday and Wednesday. This 385 level was where I got it. The resistance, the 385 resistance. So I grabbed the 3840 puts at 760, and they actually went green for a little bit, and then it just popped. It just didn't work out. Actually, no, it did. Yeah, no, this is not the one. It was the other one I screwed up. I'm looking at the wrong one. Yeah. The 3840 puts it got 760. They did drop. They went from 760 to 9. So they did get a little bit of a drop right there. I was like, okay, why didn't I sell into that? No, unless I got it down there. But yeah, I definitely got the 760. And they went to 9. So what did I end up selling them at anyways? Yeah, I sold them at 9. And I dumped the rest at 850. Okay. Then let's see. Okay, next one I took a loss. I took puts at 1205. Right here. Okay, I get why I grabbed it here. You get all these small candles right here. Still, you get all these huge misses. And Apple, I mean, it went from what? 373 to 386. So it's gone $13. It showed some exhaustion. So I got that. Popped up, faked out, dropped, popped back up. And when it came back down, I actually thought this is where it was going to give up. So I grabbed the 3860 puts at 940, and I grabbed it right there thinking we were going to dump. It popped and just kept going all day long. But yeah, right here, I would have taken it again because based on all the huge misses and Apple pushing it, it started to show a little bit of an exhaustion right here. I'm able to get a little bit of a play right here, and it faked out, popped, and faked out. When it faked out the second time, it got below the 385 area, 385.20 area. That's when I was like, okay, this thing is going to dump, and it didn't. It just popped, and it just kept going and going and going. It was just ridiculous, the run that it had. throughout the entire day. And even at this particular time, Apple, where did I grab this? At 12 noon time. Okay, Apple was pulling back at noon. Yeah, Apple was pulling back, but it did pop a little bit, but it did pull back a little bit right there. But no, yeah, Apple did break out a little bit right there. So that was kind of a bad play, but I would have taken it again. So I don't really see something I shouldn't have done. I would have taken that again because of the massive run up, the ER misses, and it just kind of a ridiculous run. And plus it's been diverging. Well, from here, it's been diverging. So see, MACD is going down right down here as it's going up. So it's diverging a little bit. So I get a little bit of divergence going on, exaggerated run, big misses. I thought for sure we were going to dump. And like I said, I would take it again. And I just got on the wrong side of it. But I did take puts at 12.29. Again, I took them 12.29 right here at the 387 level. Why did I take him at a 387 level? Oh, right here from the previous, from Wednesday's high. That's why I grabbed that. So I grabbed the 38.75 puts at 750, and they went from 750 to 910, and that little drop right there using this resistance on the hourly. So I grabbed it right there. Then I grabbed puts again at 252. Which is rate 252 right here. No, 252 right here. The 389, 388 level. Let me see what was there. I think there was something there on the daily. Yeah, right here. This 388 level. 388.50. You see resistance there, resistance here. It's more defined, even though it was, you could say the whole area from 386 to 388, but the 388 area is definitely more defined. As you can see, it's support, resistance. It's right dead set right there, the 389 area. 389, that's what I'm saying, sorry. Not 388, 389. So more defined right there. Rejected, support. Support, rejection, support, even though the wicks are down here. But anyways, I got up here, grabbed the plus the 3,900 puts were pretty cheap going this end of the day. They were at the money, or even, I think they could have been even in the money at that time, pretty close. So yeah, I grabbed the 3,900 puts at 720, and they went from 720 to 880. So got a little bit of a drop, but glad I sold it. The thing just kept going. This thing would not pull back whatsoever. The FOMO was real. It was just ridiculous. Friday was probably one of the craziest days I've seen in a long time. Probably not since COVID. So many things going against it that it just should not be squeezing like that. Just a major short squeeze, dead cat bounce, a bear market rally, whatever you want to call it. Just a crazy day. Usually you've seen stuff like this back in the COVID crash days. You'd see these kind of ridiculous runs. That it gets these a million reasons why it shouldn't go up, and it still ends up going up. The market just doesn't care. It only cares when it cares, and it definitely did not care on Friday. So that's going to do it for the recap. I know I probably did a lot of rambling and a lot of venting and a lot of other nonsense talking and bad analogies. But anyways, that's going to do it for the recap, and thanks for watching.